Hey all, welcome to Share Trek. This is Raj here, and we have Sandeep with us for the regular weekly spotlight. And he's going to be talking about a very interesting company today. Sandeep, which company are you going to talk about?
Today, Raj, we are talking about a very interesting company in a segment that a lot of people don't cover very much. TTD, the Trade Desk.
So Trade Desk does a lot of advertising brokerage with online platforms and channels. Recently, the price had gone down. There was a huge gap down, and then it's starting to pick up. The question is, what is happening to Trade Desk? I have some ideas of my own, which I would like to share at the end, but Sandeep has done his regular work looking at all the financials and everything. So Sandeep, I think it's a very good choice on your part. So I think without further ado, let's get started. Welcome back, friends. So as I said, Sandeep is going to talk to you about Trading Desk. Sandeep, please run with it.
Wonderful. Thank you for that introduction, Raj. Thank you for that quick summary of what Trade Desk does. Trade Desk is a company that does advertising, and they are one of the biggest players in advertising. I've taken a look at a whole slew of advertising companies, and this is one that actually has better margins than some of its competitors. An 8.3% profit margin right now, but I'll get into why that is that is a little low. It has mainly to do with what happened in 2022. So first of all, if anybody doesn't know what a company does, we go over to their financial statements and you could see a little summary of what it does. It's an advertising play, mainly digital advertising. And what it does is provides what it calls CTV, connected TV advertising. That is kind of like the advertising that gets done with companies like Disney, with other companies like Netflix, where you have a product that you kind of show on your TV. Same thing with YouTube. A lot of YouTube people watch YouTube on TV. So this company, TTD, Trade Desk, it experienced a wonderful bull market, especially in 2021 and 2022. In 2020 and 2021. But then in 2022, it became very hated. The stock market just didn't like this company. And why is that? The reason is when 2022 came around, when rates starting rising, a lot of companies just started cutting and cutting. And one thing that was common when I was reading a lot of these statements from Google, from Apple, from other companies, Microsoft, from Nike, from all of these companies is the first thing they started cutting was advertising, which really dealt a harsh blow to TTD. It was so bad in 2022 that this very profitable company went negative. They started losing money, that they took that significant a hit. But it's not so much the case anymore. And what I'm about to show you all today in their earnings, I think might change your opinion about TTD. So TTD they kind of fell on their had a nice gap down, a nice gap from their recent earnings. And that is because their earnings per share beat 0.33 beat instead of 0.29 expected. Revenue, huge beat. 493 beat the 487 expected million, but their guidance, the market was expecting 610 million guidance for the upcoming quarter. They expect 580, which is still about a 25% growth. Market was just expecting a little bit more. So the first thing we look at when we take a look at some of these balance sheets is their cash flow statement. What points out to me is $81 million in net income, which this time last quarter, as I said, that this company experienced a huge bear market. This time last quarter, they were negative. They were losing money, evident here. And look at that massive increase. But anyways, $81 million in net income. They're spending about $21 million in property, plant, and equipment. If we take a look at right over here, this number, operating net cash from operating activities, this is your free cash flow. They have about $507 million in free cash flow. However, $370 in stock-based compensation. This company, I also took a look at their last June earnings. Stock-based comp has always been high, which is a little bit alarming to a lot of people that this company pays out so much in stock-based compensation, which could be one of the risks for this company. Anyway, if we take a look at this $370 million in stock-based comp, that's almost 3/4, 75% of their free cash flow, which is extremely significant. But their cash is looking pretty good so far. We know they have $507 million in free cash flow. How's their income looking? We just walk on over here to the income statement. They make about $493 million in revenue, which beat the expectations of 487 and is up from the prior quarter of 464. So it's nice to see that the revenue is increasing every single quarter. As investing in growth companies, that's what you like to see. Their OpEx is still sitting at about $455 million, which is up from the prior quarter of 422 million. But this is what is appealing about this company to me. Their platform operations, sales and marketing, technology development, a lot of these expenses are going up each quarter by about 32%. However, take a look at that general and administrative. Although they're able to increase their income by about 100 million since the last time, their general administrative remained the same, $131 million, which shows that the company is becoming much more efficient with their G&A spend. That's nice. OpEx, though it increased about 25%, revenue increased about 33% from the same time, which is nice. It's got relatively low dilution and interest expense about $17 million. So far, so good, but let's see how much debt this company has. And to do that, we're gonna walk on over to their balance sheet. They got cash of about $1.5 million. $1.5 billion. I misspoke. And current liability is about $1.9 billion. So, and their long-term payables or long-term expenses, it's negligible. It's just a bunch of leases. What I like to see and what really, really makes me a little optimistic is if you take a look at their cash of about 1.5 and their current liables about 1.9, if you would add in their revenue from the quarter, just a quarterly revenue, or their free cash flow of the quarter, they'd be able to knock out all of their expenses just all at once. So in my opinion, the balance sheet risk is very low. Very low balance sheet risk. But why is this company not doing so hot? They have a delicious looking balance sheet. They're making a whole bunch of revenue. The company is in a sector that is doing very well. Why are they beaten up? In my opinion, that is because of valuation. What I've done here is I brought back our wonderful little growth stock valuation chart. TTD trades today about $71 a share. However, their earnings per share, exceptionally low. It's about at the end of the year, expected earnings is about 1 EPS, about 1.09 EPS, which is given their PE ratio of 65. That is huge. That's up there close to what Tesla is trading for, and it does not have the same sort of recognition that Tesla does. Their expected EPS growth, although is 26%, giving them a PEG ratio of 2.5, 2.5. Right now, they're trading close to about an Apple or a Google valuation, but it doesn't have the same love, the same history, the same sort of representation, people's portfolios as Apple, as Google does, these big, huge tech names. It's just a small company. In my opinion, because their valuations are so rich and the company is trading at a huge, 65 price to earnings, despite the massive discount, that's deterring a lot of people from buying now. But I also took a look at their earnings statement, and what I heard was surprising. First of all, optimism all around. Their CEO, very optimistic. The CEO says the company is well positioned for the second half of 2024 as advertising sentiment improves, much better than what they were saying in 2022 when advertising sentiment was just nothing. Everyone's cutting advertising. They also said we expect 2024 revenue to improve 23 to 25% year over year, excluding election spend. There's something happening next year, which is massive, affects the whole world, the US elections. And these people running for president, they have huge super PACs, huge spending budgets, massive advertising budgets, and they're going to be spending, baby. They always spend a whole slew of money. And that's something to consider. 23 to 25% revenue growth, not even considering what they're going to see from elections, which is just left to our imagination until we see the numbers. And this is another thing that was just this statement stuck in my head. The CEO said ad-supported models for things like Disney Plus and Netflix. This company does the ads for Disney Plus, and at one point they were trying to get the ads for Netflix, but Netflix decided to go with Microsoft. That's something for another time. But anyway, they do it for Disney. What they said was, these companies, Disney, Netflix, are making significantly more money off the advertising tier than the paid tier. Wow. People are sometimes going for the lower, a lot of people, actually, more people are going for the lower advertising, pay with ads, watch your shows with some ads, kind of like how you do with the TV. These companies are making much more money on that, and they're seeing growth in that sector. So that is very, very just a jarring statement to me. So in conclusion, TTD, the trade desk, I see a really good future in it, but that valuation of that price to earnings of 65 and their PEG ratio, which is really high, 2.5, close to Apple valuation. Their valuation is just so high, but the company is showing so much promise, so much enthusiasm. I love seeing that it's like an underdog story. Last year, losing money, everyone discounted this company to like not make it, and they made it. They're getting 33% revenue growth, and they see it continuing. If that valuation starts to become much more attractive, I think this company is going to become much more attractive. And considering the election coming up, I think bright days are ahead for this advertising company and maybe advertising as a whole. But Raj, after hearing this, what do you think about advertising? What do you think about CTO? What do you think about the trade desk?
Okay. That was a good one, Sandeep. I didn't know as much about trade desk until you started talking about it. And I think first, as usual, I would like to go to the TradingView platform, look at the pricing, and then come back and share some thoughts. So what I'm going to do is I'm going to move over.
Right.
So trading desk price chart is out here, and you can see that all these candles are one day candles. And I'm just going to zoom out a little bit so that we can see that we are on a bull flag here right now. So this is a bull channel which is going up, and this is a consolidation happening within a band. And this is typically a bull flag. A bull flag always breaks out on the upper side, assuming that nothing unexpected happens. And if that is the case, then how do we estimate a price target? So for a bull flag, what you're supposed to do is you're supposed to measure the distance from the start of the flagpole to the end of the flagpole. And to be conservative, I take it at the bottom. So this is the line that I got here. I've cloned it and I've placed it here where I think we might probably have trading desk breaking out of this flag pattern. And if that happens, then I'm thinking that $94.91 could probably be a target, price target for this stock. And this exit from our channel could probably happen around 29th of December. That is the end of this month, assuming everything goes in the right direction. So that's what I'm thinking. And now let us look at the price chart to see what has happened here. So at one point of time, it reached a peak of 113.90. That was on 16th of November 2021. Since then, it fell a lot, and then had a huge gap up, which had to be filled up. So it then came back down again, but then it didn't go up. It came back down again. And now we have this situation where we have this bull flag, and I'm considering the bullish channel having started from here. I'm taking a very conservative approach. So you saw my target, which was for 94.91, assuming no surprises. Having said that, I would say that if we look at what Sandeep had mentioned, I think Netflix and Disney are two new components that they have seen, which has given them as much revenue as possibly all the other channels that have given them so far. If that is the case, then we can definitely look at turbocharged revenue going forward in the next quarter. So that's the first point I would like to make. The second point I'd like to make is that I do not know whether in a holiday season ad spend goes up on an online channel or whether it goes down. For example, if people are all busy doing Christmas shopping and traveling across to be with their families for Christmas, are they spending as much time online? And then does that give TTD a chance to put more ads? I'm not clear about that. But then what you said, Sandeep, makes me a lot of sense in the further future, further nearer term future, which is the 2024 elections. That's a juicy bit of money out there, with so many super PACs having millions and millions of dollars that they want to spend at various levels. And YouTube, definitely a lot of people are watching YouTube. And of course, people are watching Netflix. During the holiday season, I'm pretty sure that there will be periods of time where people all sit together with their families and watch a lot of Netflix and Disney. There would be binge watching. So yeah, it looks very promising going forward. I'll definitely look at TTD. I don't know how rich the valuation is, but Sandeep, you're thinking that it is still a bit rich and it has to be a little bit down in the multiples so that you can consider buying it. And the share is not cheap. It's at $71.60. So if you want 100 shares, you have to plonk around $7,200, including commissions and everything. And then you have to wait for it to go up. So I think as far as I'm concerned, I would definitely watch this particular share. I'm sitting on cash right now because I sold off all those FANG stocks that I had. I sold off Apple. I sold off half of my Google. I sold off Netflix. I sold off many things which are looking frothy to me. And if the market goes down, I have money to put back into the market. And I could definitely consider TTD along with FNGU and others. So that's my thought process here, Sandeep. So what else do you have to say, Sandeep?
It's just as in one way or another, it seems like we're all going to be watching TTD, whether you're sitting down and watching some great shows with your kids, your spouses, your families, your friends out there on Disney Plus, or whether you're watching the stock price go up and down. You're watching their valuations. It seems like TTD might just be part of the lives of many of us, at least in the future. and especially in the next year when we see the insanity of the election.
Yeah. Thanks a lot, Sandeep, for a wonderful coverage of TTD. And friends, this is what we have done for this week, the week spotlight. We are almost done with this. And we'd look forward to hear from you about what you'd like Sandeep to analyze next. Please put it in the comment section below. And also, we'd like to have your likes so that our videos can be helped by the YouTube algorithm. And also, if you like this particular segment, and you have something else that you think Sandeep and I can do better as another program on a weekly basis, please put your ideas in the comment section and we'll definitely give it a thought.
Yes,
Thanks
please.
and have a great day, friends. Sandeep, you want to say anything?
Oh, have a good day, friendos. As we enter December, comes time for holiday season. So, season's greetings.
Thanks a lot and have a great day, guys. I'll catch up with you in the next video, and Sandeep will be back with us next week with another weekend update. Bye for now.
See you, friendos.